Net worth is perhaps the most important number in personal finance because it takes everything into account. What you have and what you owe, as well as what you earn, save, spend, and pay towards debt. It is the utter, absolute truth about where you sit financially. But before you start measuring your success by your net worth, you need to make sure you've added all of your financial accounts, including key assets like real estate and vehicles. Check out our accounts tutorial for instructions on adding manual property accounts. When all accounts have been added, including property, what you'll have is a remarkably accurate summary of your financial life. The value of your assets, what you own, and the balance of your liabilities, what you owe, are combined to give you a net worth value. This value is tracked over time so you can monitor your overall financial progress. Next, click on the data point for an individual month. You'll see a summary of your gains and losses, which are combined to equal the total change in your net worth for the month. Gains increase your net worth and come from spending less than you earn, paying off debt, and putting money aside in savings. Losses bring your net worth down and result from financial behaviors like spending more on a credit card than you can immediately pay off, or taking money out of savings. The good news is that if you consistently spend within your means and make reasonable payments towards your debt, your net worth will continue to grow, leading you closer to your financial goals.